Hello and welcome to the Look Ahead with me, Felix Incotta, Senior Market Analyst at City Index, looking ahead to tomorrow, Tuesday, the 18th of March. So overnight, in the European session, we'll be watching out for German ZEW economic sentiment. Also, there will be a vote in Germany on the fiscal reform. We've got Canadian inflation data also due to be released, along with US building permits and industrial output. And as well, there will be a lot of attention on Nvidia with the GTC event, the annual event, which is across the whole of this week. But tomorrow we have CEO Jensen Huang will be speaking. So just let's kick off with that. Obviously, Nvidia has been trading well below its record high. It's been hit by a sentiment, and we've seen a sell-off in Nvidia as well. You know, a lot of uncertainty ever since that DeepSeek disruption. But in addition to that, obviously the broader macroeconomic backdrop has not been supportive of risk assets, particularly of US stocks. So that's also aided that sell-off. So it'll be interesting to see whether tomorrow, Huang will be able to really inject any optimism surrounding the AI trade, which has been lacking of late, to say the least. Now, usually this session, which will be the speech we've got on the 18th, and then there's a Q&A session for analysts, which will be on the 19th of March. Typically, a big part of this conference that we see is sort of for GPU-related debuts. The Blackwell Ultra is also expected to be unveiled, the next chip. We'll also learn more about Nvidia's next generation GPU platform, Rubin, the successor to its Grace line of CPUs, Vera. So, you know, lots going on, lots of new products, lots of unveiling. And obviously this all comes against that backdrop of that disruption from DeepSeek. So, you know, hopefully it will be some encouraging news and reasons to be positive regarding the outlook for the stock, regardless of potential disruption to the sector from cheaper AI models, and also from obviously concerns regarding exports to chips to China. So here we do have the this is the Nvidia chart that I've got in front of me. As we can see, that's the all-time high that was reached there just at the beginning of January, just before Trump came in. And we've seen a series of lower highs and lower lows since the start of the year. It's quite a choppy chart, quite a messy chart. We've got the 50 SMA, which is looking to potentially cross below the 200 SMA, which would be a death cross signal, which is considered a bearish signal. Now, we've obviously seen the recovery from this low here of the 104 level. But I mean, and whilst it's sort of it's made some headway into the recovery, we're nowhere near getting a higher high, which is needed at the 142 level. So, I mean, I think if we can get a rise above here, which is the 128, that would be an encouraging sign above the 200 SMA. We may see buyers build momentum, but so far that doesn't show too many signs of happening. And the potential, if we see any disappointment coming from this week, if we see ongoing sentiment concerns regarding the US outlook, then that 104 level could become back into focus as a level that's needed to be break below in order to create a lower low. So as I said, on the upside, looking for a rise above that 127 if we do get some sort of optimism surrounding the news that we're getting from the event across this week. I think it's also worth just having a look at what's going on in the NASDAQ. Obviously, in relation to this chip stocks, and the Nvidia has been a big driver of movements in US tech stocks. Obviously, we've had this very large move lower in the NASDAQ. It's in correction territory, falling away from that all-time high that was reached at 22,225. Just again at the beginning of February, down into correction territory. We did find support there at 19,100, and we've seen a little bit of a pull higher, push higher, a correction higher that's brought the RSI out of oversold territory. But I think, you know, there's no reason to really be thinking that there is an improvement. I think there are two things which are needed in order for sentiment to change towards US stocks. And that would either be a pivot by the Fed or a pivot by Trump. Obviously, we've got the Fed meeting on Thursday, so markets are going to be a little bit cautious heading into that meeting where the Fed isn't expected to cut interest rates. But obviously, words from Jerome Powell will be watched very closely to see where the Federal Reserve sit as far as the outlook for the US economy is concerned. Let's not forget, at the end of last week, we saw Michigan confidence fall to a 2.5-year low. We also saw inflationary expectations rise considerably as the Trump's policies are expected to add inflationary pressures to the US economy. So that could be pointing to that pretty difficult trend of stagflation if we do see growth prospects diminish in the US. So, as I said, we do have data tomorrow from the US. I don't think it'll be necessarily that market moving. It's industrial output, it's building permits, so nothing major, but some levels to be watching. We're just testing this level here, which is 19,600. That's the low that we saw back in October 2024. Got this doji candle, which is suggesting sort of uncertainty and not indecisiveness. Not really sure what's going on today, in the sense that that's what this candle is showing. We're not seeing neither buyers nor sellers dominate. So on the upside, if we do get some good news from Nvidia, or at least an injection of optimism, that would be the next level to watch on the upside, would be around that sort of 20,000 level. But I wonder, as I said, if any optimism could be short-lived. On the downside, if we're looking for a break below 19,100 to create a lower low, and that could open a deeper sell-off down towards this level here, even 18,300, which was the low that we saw back in September 2024. So just with regards to other things to be watching tomorrow, as I said, inflation data from Canada expected to tick a little bit higher to 2.1%, up from 1.9%. But really, I don't think inflation is the main focus right now, because obviously we've got all this trade tariff announcements going on, whilst we've had the steel and aluminium trade tariffs being applied. We've seen a delay for a month on other tariffs applied to Canada. So, I mean, but at the end of the day, those are at the moment still going ahead at the beginning of April, which are expected to be inflationary and which could also create a headache as far as the outlook for the Canadian economy is concerned. The Bank of Canada did cut interest rates in the meeting just the other week, and could be forced to do so again if there is sort of concerns that these trade tariffs are going to be very damaging for the Canadian economy. So just what we're seeing there, we are seeing a fall off in the US dollar today. That's this sort of the black candle here. That's after US retail sales came in weaker than expected, again adding to evidence of concerns over the outlook for the US economy and weakening of the US economy. Testing a key level here at the 143. This is a level, as we can see, that's offered support quite consistently across the past few weeks and months. We do get a break below that. Next level to be watching out for is that 142 level on the downside if we see continued weakening in the US dollar. On the upside, if we do find this support holds and if we get cooler than expected, Canadian inflation, significantly cooler than expected Canadian inflation, then watch on the upside for the 144.60 level. That's the level that's been capping gains on the upside for some time. Just whilst all this is happening, also just going to be watching Euro US dollar. As I said, we've got a couple of things going on tomorrow. We've got the ZEW economic sentiment, which is expected to improve in Germany to 35, up from 24. Also have that fiscal reform vote, which is expected to get passed as the soon likely to be German Chancellor Friedrich Merz is apparently, or has reportedly, got the backing of the Greens in order to get that fiscal reform through. Now, that will mean increased borrowing to lift spending on German defense spending, which is expected to add to inflationary pressures, increased spending. So that obviously tied in with the weakness in that US dollar means that that 109.40 level is looking like it may be tested again. That was the level that prevented capped the gains last week. If we get above there, 110 is the next level to watch on the upside. As far as any support levels concerned, 108 on the downside offers some support ahead of the 200 SMA at 107.30. So that's the other one to be watching. Obviously, as I said, we've got that sort of rally in the euro today as we're seeing the sell-off in the dollar after the weaker than expected retail sales reports. So that is everything from me. I hope you've liked what you've seen. If you have, then please do give this video a like. We'll see you again tomorrow.